How's it going, guys? I hope everybody's doing good tonight. So far, market's holding up well after hours here, after a solid round of stronger than expected economic data. Not just was the data better than many had anticipated, but for the first time in a good while, we saw good news actually end up being good for the session. The Q4 GDP came in at 2.9%. It's going to be right in here. It was a tenth hotter than expected on strong labor conditions and consumer health. The takeaway is that the underlying strength in the economy is supporting activity among equities, but also inflation. The recent downtick in inflation is good news, but may not be sustainable given the economic strength. In this light, the market's expectation for only a 25 basis rate hike at the next FOMC meeting may be displaced. Now, the entire outlook could change here in the morning upon the release of the December PCE. That's going to be down right in here. That comes out tomorrow in the morning. That's my time, 6:30. It's going to be 8:30 NYSE time. The index is expected to confirm the downtick in consumer level inflation, but the data will most likely be mixed. While the year-over-year comparisons will cool, inflation is expected to have accelerated on a month-to-month basis and may come in hot. In this scenario, the odds of a 25 basis point hike will crater and could very well and very easily take the market right down back with it, especially when we're at a point in the markets where we're at a big point of resistance and liquidity crunch there. Also, just taking a look at here after hours, it seems that pretty much mild, pretty muted on things. I mean, the metals are pretty muted. Everything's just kind of hanging out. Bitcoin and crypto up just slightly. And it seems that everything is just kind of waiting on this number for the U.S. to go ahead and print, which, I mean, absolutely makes sense. Let's go ahead and take a look at the bigger picture here. And if we do take a look at this bigger picture, we can undeniably observe that the recent price action has obviously been favorable for the bullish thesis. The primary structure we have been watching for weeks now, of which we have been anticipating the breakout, is this large triangle pattern here in yellow that we've had on all the master charts, right? And if you look down there on the lower section, the support ultimately extends back to those October lows. And then if you look to the upper left, the resistance ultimately extends all the way back to the January 2022 highs. Now, the current resistance crest is sitting just right around approximately the 40.25 to 40.31 gravity point pivot range. And it is absolutely no coincidence whatsoever where today's low of day just so happened to transpire. Let's go ahead and take a look at this on an intraday look here so we can get a little bit more into the details. So yeah, in fact, if we just zoom in here on this chart here intraday, it is very obvious where we can see the triangle resistance breakout. And then we're going to get the back test. We're going to get the wick. We're going to wick right into it. And then off of those wicks, we're going to get a nice move back up, right? Now, while this is certainly constructive and does favor a more near-term upside, we would caution any broad claims you hear, read, or you yourself conclude as a narrative of a new bull market or anything of the sort. The reality when we are looking left, remember, we always want to talk about chart from right to left. You can see we can get back here on this daily. There's our Christmas highs. Got my little tree there. Don't judge. I got emojis now, okay? So yeah, we got this Christmas high here, and we still haven't cleared those. We're not out of the woods yet. Yes, we're finally getting this first pop, but we are not out of the woods there. Let's go ahead and go back down to a 30-minute. In fact, you know what? I'm going to go down to the 15-minute just so we can just see a little bit clear what we're doing here. Yeah, so I mean, we remain in a massive 9-month sideways range. Currently at the same price point we were back in May 2022, and in spite of everything, we remain under that December swing high and therefore continue to regard this as though we are in a long-term consolidating market, not a bull nor a bear market, a trader's market, if you will. And, while today was largely bullish, there were enough swings and traps, pretty much as there are right every single day lately, that it once again demonstrates one of our key concepts we like to educate about and demonstrate on the notion that bulls lose, bears lose, and as it stands currently, Really, only level-to-level traders are out here ultimately making profits day to day on a consistent and meaningful basis. Rigid, one-sided biases and day trading, they're not compatible in this market, not whatsoever. And it is essential, guys, to trade one level to the next, manage risk accordingly, and automatically at each reset your bias. Absolutely no room for greed. Yesterday, our probability-based general lean was that the 40, 45, 4K range was still signaling that it was basing to fill out more, with the clear trigger above being the 40, 45, 40, 56, 75, where the breakout would be highly likely to seek out our next major target area at the 40, 70, 40, 80 distribution territory, aka sell-side liquidity, aka supply imbalance. And as we can see here, this played out rather nicely for us today, spiking to 40.6825 in the morning, setting up the regular trading hour swing high, and marked it right there, followed by the clean move down, back testing key support of this 40.20, 40.31 gravity point, and then ending the cash session directly in our 40.70, 40.80 end zone, setting an even 40.77 high of day. Now, despite all of the volatility, though, the imperative focal message we should all be taking away from today is that ES has now finally broken its core downtrend line from the last January 2022, and in addition, we have now closed 4 full sessions above the 200-day simple moving average for the very first time since, quote-unquote, bear market started. Now, this is obviously extremely bullish, but the monumental question now is if it can or cannot hold. So shorter term, the probability according to the chart remains unchanged. Bulls maintain control as long as we are bidding above 40.20 and ideally no lower than 40.45, 40.50, which will keep the push towards this vital 40.80 in play, possible dip. Then we would be looking for the 4100, 4111 gravity point as the next zone. And then we would be looking for any sort of failure of the 40.45 is going to be the first warning signal there, with the sell side momentum kicking into overdrive on a loss of the imperative 4K 39.95, as it would then be distorting into a very nasty and very serious bull trap from there down. And for a measured move, a good 3 to 5% within maybe just a couple of sessions. And with all of the earnings we have coming up next week, there's no reason this can't happen. So we want to keep a close eye on this as we get moving along. But until then, we just got to play with the chart's going to show us. We've got the numbers in the morning. We'll have a slight update as we're going. We are just still trapped in this little zone here, trading around 40.62, which is fantastic to find this acceptance. But that number in the morning could change everything. So let's make sure we're ready for that, prepared for that. We'll be up early to be watching that number and streaming it, and we will go from there, guys. Have a great night, and I'll see you just in a couple hours. Cheers, boys.